Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I'm here to bring you trading levels and some popular company symbols for the upcoming week of July 15th, 2024. Before I get going here, the usual disclaimer, everything I'm about to present is for informational and instructive purposes only. None of it is to be construed as investment advice. Precision Trading Labs, we are neither money managers nor financial advisors. So we'll lead off here and take a quick look at Apple here. So Apple closed at around 230, 230 and a half here. And so what catches our eye here are these two regions right here. If you notice right here, we're looking at a 2-hour chart here, and that these regions that are highlighted in yellow here, notice that price comes up here and then consolidates there. And then notice there is a very bullish, explosive move out of that. Both of those candles there are very bullish candles. They close very close to their highs here, and that starts that major run up here. And so right here, in this area of consolidation, if we think of the shares that are acquired by willing buyers as demand, we can also think of the shares that are offered up by willing sellers as supply, okay? And so within this region here, supply and demand are in balance within this relatively narrow price range of about $1.50 in here. And then something happens here where there's an exhaustion of sellers, okay? No one's willing to sell in here anymore, okay? And so supply and demand go out of balance here. And so what's left in its wake, where you start out with supply and demand here, okay, once price leaves here, there is no longer any demand, excuse me, no longer any supply. And so as a result, we think of this as a demand zone. And so when price comes back here again, this is an area of where we saw major upward price pressure here after this short period of consolidation. When price returns here, there is quite often a second round, a second wave of buying here. So we think of this as untapped or buying pressure that's still waiting to be tapped here, okay? And so when price returns here, this is where we would express a bullish trade. Okay, and so the way we express a bullish trade, of course, the most straightforward thing would of course be to buy Apple. But other ways to express a bullish trade at this level would be also to buy a call. And another thing that we could do, of course, would be to sell a credit spread in order to collect premium. And so one could do also a bull put vertical credit spread. But all of those things would occur at the front door of this level here of this region bounded by these two lines here. And so we think of this as a demand zone here. And so when price returns to that demand zone, again, this is where we would express a bullish trade by any of these techniques, or any of these trade structures. And of course, there are numerous other option strategies that one could use in addition to buying the stock there. Okay, and so if we look at the range of this zone here, it starts at 220 and a quarter, and then right here the zone itself goes from down to about 218.75, but then we also add on about an extra 50 cents of wiggle room for the stop. Okay, so if we add this up here, this is basically $2 of risk in terms of the stock itself. Okay, and so that's our unit of risk here. And so if we get a bounce up to here, that would be a 1-to-1 trade. If we got a bounce up to there, that would be a 2-to-1 trade, and a bounce up to there would be a 3-to-1 trade. Okay, and generally we are always looking to get at least 2-to-1 risk reward on our trades. Okay, and so again, once we establish the depth of the zone with the stop, okay, that allows us to then determine our risk and reward for the trade. Okay, and so this is where we would be looking for a trade next week on Apple. This is an all-time high here. So in fact, there is no area of supply over here. But in an upcoming chart, I will show you a couple of examples of supply zones. Okay, but right here, this is a demand zone here, and that's a demand zone here. Okay. Okay, again, there's no supply here because we're sitting at all-time highs. So there were no candles above that actually create any supply zones here. But we'll see that in a forthcoming trade here, or excuse me, a forthcoming symbol. All right, so we'll take a look now at Microsoft. And so here's a chart of Microsoft here, and let's bring that back down here a little. Okay, and so right here, this is an area right there. There's the all-time high on Microsoft here. Here's where we closed at around 453. So we do have some candles above here. Having said that, because price was up here once and then it returned here a second time, there is no fresh supply up here because price was up here. Okay, it came down, didn't really go very far, and then it returned up here again. So this is really all just kind of one region up here. Some people might look at this as resistance, but for us, there's no short trade up there. Okay. On the other hand, down here, there is a clear area of demand here. Price comes up here, rallies into there. Notice there is that area of consolidation, and then notice that exhaustion of sellers that occurs there. Okay, price rockets out of there. Again, these are two candles with a great deal of energy, and then price rockets out of there. So when price comes back here, we can think of this as an area again of price pressure that's waiting to be tapped, and then again, this is where we would express a bullish trade out of here. So we would need about a 5+ % drop here to go from about 450 down to about 429 here. But if we do get that pullback, this is where we would express a bullish trade. All right, and again, what I showed you on Apple, this is what our trade would look like. Okay, here would be our entry at around 428.70, and then down here, this is where we would place our stop, and we would put that somewhere at around the 420, maybe the 423 area or so right around there. So again, here would be our entry. That would be a 1-to-1 trade. That would be a 2-to-1 trade. That would be a 3-to-1 trade. And again, if we would get stopped out, that's where we would get stopped out. And of course, that would be a 1-to-1 loss. Okay, so that's the story with Microsoft. We'll take a look at NVDA. Okay, so right here, and we actually like this this setup here a lot. This is a 2-to-1, excuse me, a 2-hour chart of NVIDIA here, and notice price drops here. Okay, consolidates, and again, notice that very, very bullish move that fires out of there. So again, right here, this is your exhaustion of sellers that occurs here, and so left in its wake is this demand zone here. Okay, so that's a little over 4% down from where we are there. And again, here's where we would express a bullish trade. And again, there's those risk and reward that I just showed you earlier. Above here, and I think if we turn this into the 1-hour chart here, we'll see over here. Actually, no, we'll just be sticking with the, whoops, sorry about that. Let's try that one more. So right here, we can see that there is an area of consolidation that occurs here. Price rallies up there. Notice it then goes sideways, and then notice that that very bearish move that starts downward here. So where I showed you on those prior charts of an exhaustion of sellers, what we have up here is an exhaustion of buyers. Okay, price, for the better part of let's say a couple of hours, price goes sideways there, and then notice price just drops out of there. So there's no one willing to buy here anymore. Okay, so that's the exhaustion of buyers here. So when price returns here, okay, this area of supply would be a place that we would look to express a bearish trade. Okay, and so the way we would express a bearish trade, one could short the stock here, one could buy a put, and then if one wanted to collect premium, one could sell a bear call vertical debit spread, excuse me, credit spread. And so that would be the way when one could collect a premium up here. Okay. And all of that would occur at around that 138 and a half area. And again, as I showed you earlier, of course, we would have our risk management risk management plan in place. And so right there, excuse me, that would be our entry point, and then we place our stop somewhere behind that supply zone there. We would, based on the ATR here, I would give it about another 50 cents or so, and so that would put our stop at around, let's say, 141 and a quarter. Okay, so somewhere around there. So again, there's your 1-to-1, there's your 2-to-1, there's your 3-to-1, and then there's your entry, and there's your stop out. Okay, below here, again, I showed you before, that was our area of demand here, and that's the basis for the bullish trade. If we take a look at Meta, and let's go back to the 2-hour chart here. In fact, over here, we really have, over here, I believe I was actually looking at a daily over here. So in fact, let me turn this back into the daily chart here. So if we look right here, we'll see that price rallies up there, and then notice then you have that immediate reversal. Okay, price then goes sideways, and then notice then there's that very bearish candle here. So this is an area of supply up here. Okay, this is again that exhaustion of buyers that I showed you before, and then refining this with the 2-hour chart here. This is where I decided to place the front line here. Generally, we always place the back line at the candle that trades the highest. Okay, so if we just kind of blow this up a little, we can see right there, that's the candle that trades the highest. So that establishes the back line of our demand zone. And then there's some discretion about placing the front line. And oftentimes I'll drop the time frame down a bit, and that helps us to refine our trade there. So right here is our here's our entry point. Again, there's our stop out. And then this is where we would express a bearish trade. And then right here we have a rally, a base, and a rally in the daily chart. Again, you can see that a little clearer if you move it to the 2-hour. And then right there, you can very clearly see that there's that rally, there's that consolidation, and then there's that gap, and then we go from there. So again, right here, this is an area of upward price pressure that's waiting to be tapped. And again, on that supply zone here that I showed you earlier, this is an area of downward price pressure that's waiting to be tapped. And lastly, we'll conclude with Netflix. And in fact, I actually like this particular, both of these levels I actually like a lot here, because they really kind of really hold to all of our rules here, and they very well qualify in terms of both the structure of what we're looking for, as well as the risk and reward that comes out of these levels here. So here's where we closed on Friday here at 647 and a half. So we need about a 4.5% move. We're about a 4 up here to get to this demand zone, and we need about a 4% move down here to get to this supply zone. Okay, excuse me. Here's your supply zone up here. It's been a long week. There's a supply zone up here and a demand zone down here. So this is where we would express our bullish trade here, and this is where we would express our bearish trade here. So right now we're sitting kind of right in between here. So in the early part of the week, we'll see where it goes. Also, one comment that I want to make here is we have just entered earnings season. So for all of these levels here, we're actually going to be looking to, we're going to have to keep an eye on the calendar. So for instance, here on Netflix, unless we get to this level very, very quickly, we would probably not be looking to take any sort of positional trade, because we don't necessarily want to be gambling on the earnings announcement. On the other hand, we might be looking to do a straddle, an earnings straddle, when the earnings announcement occurs. So we'll be looking we'll be checking that out as the week goes on. But we can see right here, the earnings announcement for Netflix there is on July 18th. And then all of these for all these other symbols, they're also very closely upcoming here. Let's see here. Here's August 1st. So we got some time for that for Apple. So that's August 1st. Here's Microsoft. That's on the 23rd. So that's less than 2 weeks out. Here's NVDA. Okay, that's actually a way out. That's near the end of August. Here's Meta. Okay, that's July 31st, so that's in a little less than 3 weeks. So we got some time with that. And then in terms of Netflix, that's on the 18th. So that's less than a week. So again, for these various for these symbols, particularly for the ones where their earnings announcement is coming up very, very quickly, we'll need to keep an eye on the calendar to ensure that we have sufficient time in the trade. So if it comes up that we end up getting to a zone and we have only got like 1 or 2 days to go, we might just pass on the entry, or else we'll structure the trade based on a lower time frame so that we can get into the trade maybe for a day or two, but then be able to get out of it and have a reasonable chance of making money. So there you go. So anyway, this is Mitch Firestone with Precision Trading Labs. Thank you for the privilege of your time, and I will see you next time.